What's up, everyone? In this video, we're going to be doing the weekly recap of the stocked up trading floor. This week was definitely another bearish one for the S&P 500, but there was definitely a pretty strong recovery on Friday. So besides that, let's get right to this recap, and we will start off with the theta trades. Looking at the theta trades that expired this week, all four of them immediately expired for max profit, which was great to see. Even if there were some trades that expired in the money, or the options ended up getting assigned, those could easily just be converted into covered call trades or adjusted in any way that the investor desired. But either way, it's definitely good to see these four trades expire for max profit. Shifting over into the theta or the high risk scalps for this week, starting out on Monday, there was definitely some pretty good action as there were multiple 200% plus gainers, which was great to see. As always, there were a handful of plays that did decently well as well, and then there were a handful of plays that didn't really pop that much or were just duds in general. As we scroll throughout the week, Tuesday and Wednesday, it definitely did slow down a bit as there wasn't as much intraday craziness. But as we get to Thursday and Friday, that is definitely when the intensity started to pick back up again. Looking at some of the action specifically from Friday, we could see that there was a handful of pretty big plays just all across the board. On Friday, it was mostly on the bull side, as expected, as we saw a lot of dip buying, short covering, and just bullish actions in general. But either way, it's nice to see that not only the market is, of course, moving in a momentum-driven way, but we're also seeing volatility, generally speaking, continue to increase, which helps increase the prices of options. It only further reinforces that momentum-driven market environment like we are certainly seeing now, and certainly presents good options trading opportunities down the line, as when implied volatility and volatility in general is elevated, especially to like a decent degree, that makes for situations where you can sell options that are very expensive and let that work for you. Oftentimes we see this during times when the stock market is also down. So for example, when you have stocks down and you have implied volatility up, that makes for a situation where you have a bunch of likely good assets to buy at relatively low prices, and you can sell put options on those, not only to collect a great premium, but to collect an even higher premium, because when these stocks fall and implied volatility rises, that only increases the expensiveness, you could say, of those options, as the implied volatility percentage is a significant factor in the overall options pricing formula, you could say. So either way, it's good to see the market moving like this, and there should be even more opportunities as the weeks and months go by. Thank you all so much for watching, and have a great rest of your weekend.